for the record, we're in February of 2023. Now that I know what the year is, I'm going to do something for the record. Somebody asked a question in regard to, hey, could we get a repeat of this fractal here from the 32K low of the bear market in 2018 going into 2019, 3,200 up to 14K with a massive, well, this was all coronavirus, so that likely wouldn't repeat, but could this happen again? From the lows up, and the macro low is after a mega rally. This mega rally, or no, actually all of this. This entire screen okay. Now, this is not the best chart to look at. I cannot stand that damn dog bark. Okay, now. Raging bull, wait, until January 6th of 2022, I think, right? Was the top, January 4th. Just like Bitcoin's 27 or 20K top. Wait, November? That's, yeah, January 3rd was the top of the market. Okay, I was gonna say it wasn't November. So why was IXIC? Oh, IXIC was, because all of the free money went to tech stocks, so they fell first. Okay. Yep, so what happened here in tech stocks is they fell before everything else because they're the most overvalued. Okay, because a lot of the free money from helicopter, literally, it's actually called helicopter money. Like that phrase was made for financial the easing. Like that term has, like, you might be offended by it, but it's just a term. It's not my term. Just money being printed for quantitative easing. The most of the money went to tech stocks, and that's and why it went down fast. But anyway, that bear market and that 14K rally happened in this green box. Right now we have a red box. So I think no. I think 33K to 38K, maybe. Maybe. I would still give it like I don't know, it's close to 50-50. Like I haven't, like Bitcoin can go all the way down to 21K and be perfectly fine on the daily scale. Like totally fine. But it would take like 7 months, it would probably take 150 to 250 days to, if it does go down to 21K, it'll probably take 100 days for it to climb all the way back up to 38 or 238, but it still could, it's not unlikely. So now we are starting this. For the first time ever in Bitcoin's life, it's never done this once. Every single dip was either very shallow and recovered quickly, or was not shallow but V-shaped and recovered quickly. So it's a raging 12-year bull market. All corrections were either shallow and short-lived or deep and sharp, but an extremely explosive correction. Because why? Because it was free money. Like, it's literally just the price of these assets climbing with inflation. So you, like, with this value, like, it's actually not going up this fast. It's only actually probably going up more like this. Like, most of this angle is inflation, just so you know. Like, if you're in the stock market and you're getting 7% returns, you're literally breaking even right now. Which is a point I forgot very recently, and one of my team leaders reminded me of that very inconvenient fact. When you think you're a genius making 7%, but you're only breaking even, shit. And that's part of this. But the inflation didn't get really out of control until, I don't know, helicopter money started. You take about 2 years to see the effect in the country, exactly like I told my wife. I said it'll take 1.5 years before gas prices rise. And it actually only took a year. Yep, that's the first thing I said. She kept saying, free money, free money. I was like, this shit ain't free. The American people will not only pay it all back, but you will pay back more in the long run by far. Anytime you get money from your government like that, it is worse for you. Is it nice in that moment? Fuck yeah, it is. But you will pay for it and more, just like a credit card. It is a credit card. Like, that is what it is. Whether you believe it or not, it is true. Okay, so yeah, that's why I don't think it will. We're not in the green box anymore. It's over. The party is over. Okay, now let me show you one more thing to bring the point home. Okay, pictures. Oops. Where did I save this picture? On Timothy. Shit. Huh. SP. Lost. I know I have this. I'm trying to show you something that you're not going to like. And I'm not trying to do it because I know you won't like it. I'm trying to do it because you need to see it. I didn't hide it in thumbnails, did I? Shit! Oh, I probably put it on my external drive. That's where it is. Right, okay, let's see if I can... it's not going to be the same. Okay, it's not exactly the same because my indicator, so I have an indicator down here that supplements what is already compelling by itself. But it just, like, it really drives the point home, like, fuck. If you could see what was down here in that picture, because it was a very complex, even though it looked very simple, but it wasn't. It was one of my team leaders, Jess, she came up with the, I guess, the, it came up using, or with this suggestion of looking at this on the yearly scale with that indicator. It's just hyper compelling. The stock market won't make aggressive all-time highs for over a decade. And I produced this and published it for everybody. I think before you can go back in any national news television, anywhere. Gareth Hathaway or whatever said it a month after me. But I guarantee if you did days of homework and you didn't sleep and you just tried to look for somebody who said it first, you won't find anybody. It's called the lost decade. And I am predicting an entire, it's probably going to be 12, but You won't have aggressive all time. It will go sideways for a decade or more, like for real. Now, can that change? Yeah. But when I say it will, I mean it's highly probable. So I should be more specific with my words. I apologize. It's exceptionally probable that this will be right, even if it's inconvenient to think so. It doesn't matter what you think. Like it doesn't. And it doesn't matter what I think. I can think and wish against this all day long, but the data remains the same. The data continues suggesting the same thing, which means the party's over for a long time. And because you had such a hardcore party this time for 12 fucking years and more helicopter money than any other time in history, in terms of raw dollars, in terms of percentage of GDP, I don't think we're past World War II or even World War I levels yet. Debt to GDP. I don't think we're there. We're not like at 129 or 130. I'm pretty sure we're not. I think we're like in the 80s or 70s even. So we're not actually that horrible off, even though our debt is to the point where it's an imaginary number at this point. You can't repay that back, and it never will. But like the dollar will disappear before our debt's repaid back. That will happen. That will be true. So look at this. And the indicator down here, these are yearly candles. It had a cross here, cross here, cross here, cross here, cross here. So the same thing's going to happen. Pivot talk all you want, doesn't matter. Not gonna happen. Or if it does happen, it won't have the effect you're thinking. It is not allowed. Something huge would have to change for this not to be true. I wouldn't go as far as to say like fusion energy. That would be bad. I'll probably be dead. I'll very likely be dead before humans can control that. Battery technology, finding a lithium substitute could undo this. That would be big. The war ending abruptly wouldn't do it. I think it would require... I'm trying to see other solutions on what would make this wrong. It would... I think the most likely candidates of situations... So the situations, right? I'm like picking a sports team, right? Like if you're trying to pick a basketball team out of all the kids at recess, you're going to pick the tallest, probably the tallest kids out there, right? If you had 4 picks, I'm going to be the 5'10" point guard with a bunch of tall people, 4 tall people, right? Strong forward or something. Anyway, but if that makes sense to non-basketball players, similar to soccer positions, forward and all that stuff. Or is forward? I don't even know. I don't know if forward is soccer. But anyway, I take that back. But I would pick like which of the possible outside scenarios are both more likely than the others. Or just more likely in general, even though they're not likely to happen in general, but they're more likely to others. Like sticks out like a sore thumb. An emerging technology of some sort could reverse this. It would have to be something like bad. It'd probably be something to do with energy. It could have to do with something like building materials, finding a way to use carbon very cheaply with easy processes, without much R&D work to get started, like not a learning curve, but a barrier to entry. It could be with building materials, but more likely energy. Yeah, it'd have to be an emerging technology could take this out. I don't think any wars or lack of wars would. Aliens visiting could do it. But that would be an emerging technology, right? If it ended up being good. So same thing. Aliens. Y'all know that meme? The guy on science.com or whatever, the National Geographic or whatever the channel is. Aliens, man. All right. And now he's forever a meme going like this. Aliens. All right. Nothing else is coming to mind. Presidential election. Transportation could, but that would be kind of that would be an emerging tech. Yeah, an emerging technology specific to transportation actually might be just as good of a candidate as energy. But it's going to take something like that, like bullet trains under the ocean, like literally something like that, or it's going to take building batteries in a cost-effective manner without lithium. That's really the only way that this ain't gonna happen. But could that stuff happen? Yeah. Humans are driven by necessity. Innovation is necessity is the mother of innovation. And if we already know China has a bunch of the world's freaking supply of these rare elements, or rare earth elements, lithium, what is it, like element number 3 or something? Or 4? Maybe I'm showing my ignorance here. I haven't looked at a chart. Oh, third. Is it the third? Yeah, it looks like it. Okay, it is third. So lithium is not rare in the universe. Well, it's rare compared to hydrogen and helium, but not anything else. No, that might not be true, because the way fusion works, I think it sticks with the even. I think when you add 2 odd numbers, it turns into an even number. When you add 2 even numbers, it turns into an even number. So I think actually no, lithium's number 3. It might be a rare. It actually might be kind of rare. But anyway, China has a bunch of rare oddity stuff in their mountains, in their rural areas, and so does Russia. And they kind of have a stronghold on a lot of this stuff that's used in emerging technology. So like even the emerging technology could be a substitution of materials. So it could be just the same old batteries, right? Like the same performance, the same cost. And technically from a user standpoint, you see no change, but a catastrophe was avoided. And that could change the entire global economy. Hugely. Yeah, energy is the most So anyway, I'm done ranting on that, but it is important. Like, look at this. Your 401k, if you plan to retire in 10 years, this shit ain't going up. It's not going to go up. So it's not just going to be throw darts at a wall and it's going to stick. No, it will not be like that. If you are about 10 years older than me, this chart is not good for you. If you're my age or younger, this chart is exceptionally good for you, because you're going to be able to potentially buy wicked ass coronavirus lows way down here. Maybe not that far, but you're going to be buying wicked ass lows, being able to do it for a long time. So it'll go boom and come back up and then boom. Like you're going to have like 8 chances, maybe only 4, but you're going to have a small handful of chances over a decade to buy insanely low. Like it could come all the way down here. I'm serious. It could be a lot bigger of a range, but the data suggests it won't be a big range. It does not, at least the data in this chart does not suggest coronavirus lows, but other data does. But still, even if this were wrong in that fashion, it would still be right of decade of sideways minimum, but it would be sideways / down. But the point remains, like this chart is very important. And so for people my age, it's a little less urgently important, but it's important to know, the money that I make, my investment decisions during this decade will have a chance to allow me to retire like really, really nicely. But if you think that that's the case now, and you're in 401k that aren't like based on, I don't know, things that can stay 7% or better in a bear market, it has to stay at 7% or better in order for you to break even. If you get gains of 6% in 2022, you lost money. Doesn't matter. You did. You lost purchasing power for your retirement. in your retirement, the dollar value is technically not the important thing. It's what can you buy with the amount of money you have? That's what's important, technically. Now, how much money have you? That's an easy way to measure that, but that's not actually what you're doing. You have to adjust for inflation, all that stuff. So just a heads up, this is a very important chart, and that's why your question stimulated me showing you this. I just wish it had the indicator down here because it's clear as day, man. It's clear. It's clear. All right, we'll see you on Thursday. And I'll try to I think I forgot to take vitamin B for the second and third time today, so my memory was a little worse today. I apologize. And I do have a follow-up soon, so I might just have to start getting injections at this point. So I stopped losing my train of thought. It's so annoying, and I do apologize, but it is what it is, and we'll see you on Thursday.